Hey guys, Steve here from the turtlefollower.com with the weekend update for September 6th, 2014. We had a couple of days where the market just really went sideways during the beginning of the week, and then Friday it seemed like it wanted to close lower, and then all of a sudden it kind of turned around and closed at the higher end of the range, bringing our portfolio to all-time highs, personal and model portfolio, which is a great sign. The market is pretty much at all-time closing highs. If you see here on the S&P 500 futures chart, we're looking over here on the right, and we closed at 2007.50, which is all-time closing highs. The high for intraday is 2011. So we're only within 3.5 points of all-time highs as far as intraday, but we are at closing highs for ever, I guess is the best word for it. So like I said, we're really set up well going into this week. We were looking for some consolidation, which I think we got. I'm still looking for a little bit more, but you could see how this 50-day moving average has continued to move higher as we've consolidated in this range here. So I think if we can get maybe another week of that, of consolidating, and then another breakout, I think we're good to go. First, before we get into our positions, I want to go over a couple stocks that triggered on Friday from last week's model portfolio, or from last week's weekly watch list. So those were Dow. Okay, this one had broken out on Thursday, but closed well below halfway point of the range, so that's a no trade. And then finally on Friday we were able to close at the highs, putting in a nice new closing high. So if you were to take this position on Monday morning, you would be buying at the open Monday morning, and your stop would probably be down here right around 51. So that would be where I would recommend you place a stop, because that would give you the trend line, the 50-day moving average, and these previous lows as all support that would have to break to be invalidated with that trade. Another one was MCK. This one again finally broke out Friday, closed right at the highs, and so you could see here on the weekly chart it had been moving sideways for a while, finally broke out. Again, if you were going to take this trade on Monday morning, I would be setting your initial stop down here at this 186.30 level. Okay, so it would be a nice little risk-reward trade for you there. That's the trend line I have drawn right now. The other possible trend line would be something along these lines here. That's definitely a lot more aggressive. So I would still consider that this 186 would be the level that would have to break. And the final one, SPG, Simon Property Group, again breaking out on Friday, closed pretty much at the highs. So if you were to take this trade, you would be setting your stop down here at 165.21. Nice tight stop. And again, you would need this trend line is obviously no longer valid. Let's take this out for a minute. You would need this trend. I would go with this trend line right now. You would need that trend line, the 50-day, and these previous lows to break to be invalidated in that trade. So those are three good setups. And even if you look at SPG, we're actually breaking out even above resistance from way back here in 2013, from the April to May area. So right now, blue skies. And again, we talk about blue skies basically meaning that everybody that's ever bought the stock is a winner. There's nobody here that is holding the stock that's a potential loser. So that usually lets the stock run a little bit further than you would think. All right, so let's go over our positions real quick. Again, we're holding 13 positions, 13 open trades, and this is available on the website. So you can definitely click the model portfolio tab, and it will bring up this spreadsheet. It'll be embedded, obviously, in the website, but you can't edit it or anything like that, but you can view it. So right now you can see here we are holding 13 trades. Our open P&L is about $7,100. All right, and we're 182% invested in our portfolio, meaning that we're using about $80,000 in margin. Since we did start with a $100,000 portfolio. Here are our open positions. Our closed positions are in gray. open positions, the best one that we have right now is AMT, up 9.96%, or 3.2R. 3.2R meaning that we have made 3.2 times what our initial risk was in the trade. So you always want your R's to be above 1, or obviously first of all above 0, but above 1 is a good trade as far as for gains, and you want your losers to be below 1. So you want anything from negative, like say 0.8 to 0 to be your losers. So that shows you that you're keeping your losers small and you're letting your winners run. Of course, we didn't have that in our closed trades. That's one of the reasons we kind of had a little bit of an issue getting off the ground here with the model portfolio, but we had some earnings and some other news that came out that we were never able to move our initial stops up. But no matter what, we are showing a nice, at this point, we are averaging 0.50 R in return. So that's a good way to look at it, as opposed to a monetary value. It's nice to look at it in an R value, and this way everybody can stay on the same page. Doesn't matter what kind of account you're trading. So with that said, we have these positions on, and we're just letting them work. We have two losers right now, APD and H&R Block. H&R Block had some earnings this past week that came out that were a little negative, but you could see here our losers right now are under 0.5 R, which is perfect. I have no problem. We're going to take losers, and we know that. That's part of the plan. We just want to make sure those losers are less than 0.1 R. So, I'm sorry, 1.0 R. And again, you can see here that our open winners, we have 1, 2, 3, 4 that are over 1 R, which is again M1, that's right there, which is again a great setup for cutting your losers short and letting your winners run. So, again, we'll go over each one real quick, but I just wanted to show you guys that and make sure you knew that you could access that on the website. Alright, so the first one of our positions we're going to look at is Apple. It was up 0.87%. So we had a couple days of a pullback in Apple, and we said that we were potentially looking for it to bounce right around this 50-day. It did bounce. It wasn't a great bounce considering how we closed on Friday, but it was a bounce nonetheless. At this point, we're still going to be holding 94.29 as our stop, but if we can start getting a little bit of a move above this 103 area, then this area here at 98 would become our new stop level. So you can see how those pullbacks, as much as you don't want them, they're kind of a necessity in trailing stops higher. ADM up 0.32%, really just at the highs. Okay, essentially I think actually just did make a new closing high. So for right now, we're going to actually take and trail our stop to this $48 level. Here we go again with there it goes. Alright, so we're going to trail it to this 48. We'll put it at 48.16, which is the low from this gap. So essentially what's happened now is we're making new highs. The 50-day in a couple days will be above 48.16, and now we would require this trend line to break. Okay, obviously this channel is still there. That's showing some resistance, so we want to just make sure we're tightening up our stops and trailing them to where we can. So again, 48.16 is the new trailing stop for ADM. What are we doing? And I'm just trying to change that price level to gray, and obviously the gray levels, well, not obviously, but the gray levels are our trailing stops that we've used, and now I keep them on there just to see the progression of the trade. You can easily take them off on your charts, but I like to show where we've trailed stops from. And don't forget, this was one of the trades that we first did in the model portfolio. I think it was our first free trade video, and we ended up stopping out for a small gain right in here at this $46 level, but you could see on the longer term chart that it's still continued higher. So that's one of the things we try and do with the model portfolio is, we're looking for those intermediate to longer term trades. AMT, our best gainer right now. Right now we're sitting 93.51, okay, is our stop. I think the next level potentially would be 96.60, but we have a little bit of some overbought conditions to work off. You can see here how far we were from the 50-day moving average back here on the 15th, and you can see again now where we are compared to the 50-day moving average now on September 5th. So you can see that as the stock has gone sideways, the 50-day moving average has continued to trail itself higher. And I think once we can get the 50-day moving average over 96.61, potentially have a breakout over 100, then this would become our new stop. APD. Okay, we talked about this pinching between this 131 and this downtrend line and this uptrend line, okay? So I think at this point it's still trying to figure out what it wants to do. I would love to see on Monday or Tuesday, I would love to see a nice breakout in APD over, say, 134. And if we did get that breakout over 134, then we would be moving our stop to this 131 level. As of right now, though, I want to keep it where it is, 128.65. We were able to trail it up from 127. Disney, really just moving sideways. All right, we had a nice day on Friday, but you could see, again, similar to AMT, as this continues to move sideways, what's happening with the 50-day moving average. Okay, so this is what we talk about where it kind of works off those overbought conditions by consolidating, and that becomes an important aspect to our trading process. You know, the longer a stock consolidates after a big move, the better it is, then, because it's showing, first of all, that there's no real sellers, and second of all, it's letting the technicals set up again to continue the trend higher. All right, so it's not going to the moon and not going parabolic. It's moving up in, I like to call it maybe like a stair step type of fashion, where similar to one trade that I've showed you before that I'm currently in, and I have been for a while, is Alcoa. You could see here how it's broken out sideways, broken out, move sideways, broken out, move sideways. All right, so that allows that longer term trend to remain intact while the stock kind of works off those overbought conditions. And the fact is, nobody wants to sell, and that's why it's moving sideways and not moving down. So same thing works here for Disney. I think the longer it consolidates, I think eventually we break out over 91 and we test $100. EQR, this is breaking out again. We've set our stop down here at 64. I think in another couple, say, weeks, maybe 2 weeks, if it continues on this path higher, then we'd be able to move our stop all the way up to 66. All right, once this 50-day moving average kind of catches up a little bit more, I see no reason we can't do that. Expedia, down 0.09% on Friday. And really, this is just, kind of in no man's land. It's pushing up against this resistance. It's also looks like it's moving sideways. And it's also above this accelerated trend line. I still think that the trend line that we want to stay with is this channel right in here. Okay, so that's why our stop is remaining down here at 82.50. Fidelity up 1.19%. And again, this is another aspect. We had this nice little shallow pullback and now another breakout. So once this 50-day moving average gets above 56.70, then I see no reason we can't move our stop to 56.70 and really tighten up that gain. GD up 0.6%. Really, it just moved sideways since we entered. Here was our entry trigger right here on 820. All right, and it's just really gone sideways. But again, what's happened as it's gone sideways is this 50-day moving average is slowly starting to turn up. And I think if we can break out, then we would be able to use this area, this 122.50, as our new stop. So again, always having an idea, always having a process of how you move stops. It's not an arbitrary thing. You enter a position based off certain criteria, and you're also going to be moving stops based on certain criteria. So, it should never be an arbitrary or emotional feeling like, oh, I have a lot of a gain, I want to move my stop. If you're in it for the longer term trend, then let the stock tell you where the stop should be. All right, don't try and just arbitrarily pick something. H&R Block. This was one of our losers that we've had, similar or just as APD. But this one had some earnings that came out on Thursday, continued lower Friday, and we kind of had a little bit of a bounce Friday afternoon. But I think at this point, we're really just back into sideways consolidation. We've talked about this in the past where if you look at the weekly chart, it's gone sideways, broken out, and now it's consolidating again. All right, we thought we maybe had that breakout here. We obviously didn't because of how fast it came. Now it looks like maybe we want to go back and test this 131 level or 132 level, and then potentially set up to break out higher again. But for right now, the trend is technically sideways. I don't think it's necessarily broken, but if we started to break this 32 level, then we would reconsider that and potentially exit the trade. LUV, this one again has gone up so far so fast, and now I really think that we need to put in some type of consolidation. If you look here on the weekly chart and we redraw this as a channel, you can see we're pretty much right at resistance. All right, so I would not be surprised to see this come back to this, say, 30, 50, 31 level. But again, let's see what happens now with the 50-day moving average. See how it's gone more from a flatter stance, and now it's kind of turning up a little bit more accelerated. So that's why I like to have the 50-day moving average. It's a gauge for me of where the average price is for the last 50 days, and it's a gauge of where I can set stops to know that I'm still following the trend and not getting my stops too tight. So for right now, our stop, amazingly, is still down here at 28. Would I love to move the stop up? Absolutely. I think the next stop level is eventually going to be this 29.30. I've said before I don't like using tops as stop areas, but I don't see a choice at this point because at some point we do have to move the stop up, and we don't really have too much to go off of just by how far and how fast this stock has moved and how little time it's consolidated in a certain area. So I think our next stop is going to be this 29.30. RSG up 0.23%. Okay, similar to Disney and to AMT. Look at what's going on here. It's consolidating, and this 50-day moving average is continuing to march higher. So, just by a law of averages, that's what's going to happen when you get consolidation. And the longer this consolidates, as this moves up, I think maybe we can provide a little bit of a springboard, break out over 39.50, and we could trail our stop right up here to this $39 level. And the final one that we're in is Tesoro. Finally got that breakout we've been looking for. I think we're going to take and move our stop to the 61.75 area. Okay, and in another few days, that 50-day moving average is going to be above 61.75. We're taking some risk off the table, and we're just allowing the trend to work. So you can see just how by moving stops and by moving these levels around, we can manage our risk without taking off any shares in our position. Okay, so that's one thing that I learned that was hard for me, is I used to say, oh, I'm going to sell half at this level, sell another quarter at this level, sell another quarter at this level, and all of a sudden I'd be left with nothing, and the stock would continue to run, and it wasn't a good way to trade for me. Maybe it works for you, maybe it doesn't, but for me, this is a better way to trade. It allows me to keep my full position on throughout the entire run. And yes, I'm not going to get out at the top. This could be the level that I get stopped out at, 61.70, and I'm fine with that. I'm fine with giving back, almost 8% in the stock, because I know that, certain stocks are going to return 40%, certain stocks are going to return 3 or 4%, and other stocks are going to lose me a few. But in the end of the day, based on those R values and everything I showed you before, I know my expectancy, and I know what to expect out of every trade. So I'm set up to win in the long term. It's not a get-rich-quick thing. Trend following is definitely a process, but I think at this point you need to kind of let your winners run and see where they're going to take you, and you'll be pretty surprised how far they actually do run. All right, and the final process that we're going to go through here is we're going to take a quick look at our new weekly watch list. And you guys can see you've gone through the last 4 or 5 weekly weekend updates, and this is probably, and I've said it probably the last 2 or 3 weeks, this is probably the smallest list we've had. And it's not because things aren't working. It's because, first of all, I'm getting much more pickier on what I'm putting on the list because we have a full portfolio. So there's really not a lot that we can take. And second of all, I'm starting to get a sense for what works and what doesn't. And I really like these kinds of setups where it just continues. The 50-day moving average is already on an incline, and the stock really is just sliding over and using that 50-day moving average and that trend line as a little bit of a springboard, I guess, and continuing the trend. All right, so I'm looking more for those because, in my opinion, the move we've had over the last, say, 3 months since we've really started has been significant in the S&P. And for my money, I feel that whatever hasn't participated in the last 3 months or has gone sideways for the last 3 months is not really a trade I want to be in. I want to be in stuff that has broken out, has followed the market higher, has shown strength, and are setting up good setups, setting up good entries to get involved with that trend. All right, so the trend is established and I want to find a good spot to get in. So here, ABT, you could see trend's established, right? Breakout over 43.10 is my trigger to get in. My stop is under here at 41.50. Very simple. Done. Next. There doesn't have to be this overanalyzing or anything like that. APA, Apache. Trends established, right? Moving sideways. Over 103.40, under 97.39. Those are the two triggers. You set an alert over 103.40, you're golden. APC. Again, trends established. 50-day moving averages, moving higher. Consolidating, setting up a nice breakout. Over 112.18. Set that alert. That's it. Set it and forget it. Ron Popeil. I don't know if you guys remember him. He was big in... when I was a kid, I used to love watching infomercials for whatever reason. But I remember Ron Popeil, the set it and forget it guy. BK. This is one new to the list this week. Again, trends established. Here's your trend. And now, there's your consolidation. You're looking for a breakout over $40, and you're going to set your stop at under $38. That's it. Simple as that, guys. These are great looking setups, and like I said, I've been pickier the last few weeks with what I'm looking for, and I'll continue to be picky just because I want to make sure that anything that I recommend is only the best. I don't want to just put something on the list just because I want to meet 30 stocks on each weekly watch list. It's not how I trade. It's not what I would tell you guys. So, BXP. Again, trends established. Right now, it kind of broke out a couple times, pulled back. I would be looking for a breakout over this 123.28 now. That would be my new setup. And I would still probably keep your stop down here at this 117.37. Estee Lauder. Okay, here's your trend. Broken the trend. Moving sideways. Consolidating right at the top. 76.95, so say 77 and under 73. EMC, new to the list. Again, trends pretty much established. There's your support and your resistance. There's your trend. Oh. And here is the consolidation that it's been having. So you can see, stock moved up very far away from the 50-day moving average. What happens? Moves sideways. Doesn't come back down to the 50-day, moves sideways. When it moves sideways, that 50-day moving average slowly catches up. So I would be very surprised if when we got up to here, say 29, that 50-day moving average, that this stock wasn't sitting and bouncing and eventually breaking out over $30. GCI, another one that's new to the list. Again, trend is obviously established, right? You can see the trend. Or if you can't, we're going to draw it right now. So here was your trend. Okay, really far away from the 50-day, right? Probably riding almost more like the 20-day moving average. Sign of an extremely strong stock. It broke that, say, trend line, whatever that worked out to be. And instead of pulling back and breaking down, it just moved sideways. Simply just digested gains, consolidated, allowed those moving averages to catch up. Friday bounced right off that 50-day moving average. So again, right now, I would be setting an alert for over 34.50. If it triggers and we get a close above 34.50, then I'd be setting my stop under 32.69. Home Depot, we talked about this. This one's just really on the list, not setting anything up yet. But look at if this, maybe this becomes a consolidation. Maybe this consolidates for a month or so. That 50-day moving average catches up, it bounces off. Now we have our trade set up. So nothing really in Home Depot. That's just on my list to be there. Hess, another one. Okay, trend has been established. It broke the trend, consolidated. Over $100.50 is your trigger. It's closed above that. I think right now, you need to be looking for something more along the lines of like 101.50. But again, same setup as we've been talking about. Honeywell. This is one that we were in, right? Here was our setup back from, the beginning of July. Finally had that breakout, and then we had every day down, essentially. We got stopped out on a break below, I think it was 94. So we got stopped here. And then eventually it continued down to $90. If you look at the weekly chart, it really went back and tested the weekly box. All right, there's your weekly box. So it went back and tested the lows. Now it's testing the highs. So let's see. It's on the list. It's not something I'm. You know what? We're gonna just take it off the list. I don't like it. Goodbye. Take it off. Starwood Hotels. Again, here's your trend line. This one's a little bit of a different play. Here's your resistance. Okay, so let's see what happens. It's kind of putting in like a little triangle here. Maybe this wants to come back down. Maybe not. Maybe it breaks out. HST. This is Host Hotels. Okay, the trend was established back through here. It went and broke down. Now it's back at to the top of the range. I think right now you're looking for a breakout over, say, 23. And you would be able to set your stop down here at 21. It's a little bit of a wide stop, but it works nonetheless. It's a trade. INTC. This one's been on a tear lately. I'm surprised we've missed it for as long as we have. Here's your trend. Nicely established. Here's your resistance. That was your support. There's your resistance. So you got a $3 range. Here's your consolidation. Okay, let's see what happens. Does it break out over 35? Does it come back and test somewhere in this box and then break out? But again, nice setup. But look at the weekly chart. That's a scary looking weekly chart if you were just looking at that. But if you can sit there and define your risk, there's no reason you can't take that trade. JWN really just moving sideways, almost breaking out. We had that on last week. LRCX is just at the top of the range under that 72.30 consolidation. So again, been on the list, and we'll see what happens with that. National Oilwell Varco. This was one we talked about, and this is maybe what's going to happen or is happening in H&R Block as well. We talked about taking an initial position off of this 82.70 or 82.80 breakout. We also said that when it got up to 86, it would most likely either consolidate or reverse just because of how fast and how far it came. At this point, I am looking at National Oilwell Varco as being in a new box like that. So if you took that position, that's fine. You're just riding it down now. But there's your new setup in National Oilwell. Okay, so you're really waiting for that breakout over 86.25, and your stop is probably sitting down here at 80.63. But look at the weekly chart. Look at how long it's gone sideways. Breakout, came back and tested, moving higher now. So let's see. I mean, this could be one that consolidates in a weekly pattern for a few weeks now. PSX, again, the trend was established. It broke. Now it looks like we're breaking out again. So I would just wait on this one a little bit. Over maybe, say, 88 would be probably a good level, and your stop would be down here at 80. Schwab was on our list last week. Okay, I mean, some of these do look a little sloppy, I'm not going to lie. But you kind of have to look at them just with a little bit of a, I guess, sometimes, when I look at charts, I kind of turn my head a little bit, and I look at it from a different angle, and I mean, sometimes it helps, sometimes it doesn't, but, maybe this is one of those head turners that you need to look at a little bit sideways to kind of get an idea. But you can see the trend is well established, right? Here's a low, here's a low, here's a low, here's another low, coming back in. So I'd be waiting for a breakout, I'll say over 29, and my stop would be down here at 27. For Notto Realty, this is one that I've been long personally. I got long back in here somewhere. But look at what it's done. I've been in this for this whole consolidation, almost this whole year. So right now, let's take this off. Activate this. Okay, it broke that trend line. And what did it do? It moved sideways. Alright, so this is another setup. But on its move sideways, what's it been doing from the weekly chart? Okay, it works on the weekly and the daily charts. So you know what I've talked about with that setup on the daily. It looks almost similar on the weekly, right? Trends established. Okay, it got very well extended from that trend line. Instead of pulling back to test the trend line, it's gone sideways. So I would expect, as it comes into this trend line, it would use this trend line as a springboard and potentially bounce and break out. I'm waiting for a breakout over 108. And then right at that point, you would be able to set your stop at 104. I'll show you that on the daily real quick. 108.61, 104. All right. WDC looked like it was going to break out. It's now pulling back, so it's setting up again. Again, look at the weekly chart. It broke out, and now I think it maybe wants to go sideways to test that weekly trend line. Nothing wrong with that. Over 102 is your breakout. Let's say 103 now. Okay. And under 98 would be your stop. Windstream Holdings. This one is a little bit different. This one had a nice pop on earnings. Okay, but here's your trend line. Well-established trend. And now, after that breakout, it's pretty much gone sideways. Alright, so you'd be waiting for a breakout over either 1166 and potentially have your stop under 11. A little bit of a tighter trade. You could also bring your stop down here to this low at 1066. That may be too wide for you. So, you have to make sure it sets up with your rules that you have established for yourself. You know what you can withstand and what you can't better than I can. I know what works for me. It may not work for you. But we're looking at high quality setups, and then you tailor your rules to meet those setups. All right, and the last one, WMB. It's been on the list for a while. Again, trends well established. Broke out extremely far away from this 50-day moving average. It's gone sideways, tested the 50-day, broke out, back up to the top of resistance, and now it's still moving sideways. And again, if you look at it on the weekly chart, if that's the line that you're going to draw, now look at what it's been doing. After this breakout, look at how far away from the trend line it was, and what did it do? It consolidated on the weekly chart, went sideways, allowed those overbought conditions to work off, and now looks like it's poised to break out again. So, bunch of different setups that you can look at. You know which ones I like because those are the ones I pretty much show. I like these setups where the trend's established and you get some sideways movement into that trend line or to that 50-day moving average, an eventual breakout, and you set your stop below it. So that's it for today, guys. Like I said, we have about 20 stocks on our watch list for this week. I don't foresee any, unless something unforeseen happens where we get stopped out of some trades. I don't foresee us taking any of these trades. These are really just for anyone who hasn't been following along that wants to follow along now. But like I said, for the model portfolio, I don't see us taking any of these. The positions are holding up well. Market's poised, I think, to maybe we can consolidate for a little longer and then break out. That would be, in my opinion, a more ideal situation. But hey, we'll take what the market gives us. If it gives us a breakout now, then maybe there's a way to trail some stops, take some risk off the table, and lock in some of those gains. We're going to have the normal videos out this week. I have been working on the website, so if there's for some reason I don't plan on doing a certain video this week, then I will definitely inform you via the social media channels. So please follow me on StockTwits, Twitter, Google+, and subscribe to the YouTube channel. That'll get you all the future updates. If you liked all the commentary, or if you have any questions, please hit the like button or leave a comment below. It would really help me out. And we'll see you. Have a great rest of the weekend. We'll see you. What's today? Saturday. I don't even know what today is. We'll see you Monday for the stock market outlook. All right. Have a great day, guys. Take care.